Imagine a world where you control your own money. No banks, no borders, just pure digital ownership. This is the allure of cryptocurrency, transforming how we think about finance. From Bitcoin's rise to thousands of alternative coins, the crypto market is a whirlwind of excitement. Whether you're an experienced investor or just starting, understanding this new asset class can be rewarding. Are you ready to dive into the world of digital gold? This essay will guide you through the basics of cryptocurrency investing. The cryptocurrency market is known for its wild price swings and unpredictable nature. Let's begin by unraveling the mysteries of this revolutionary technology.
At its core, cryptocurrency is digital money. It exists only in the digital realm, secured by cryptography, making it nearly impossible to counterfeit. Transactions occur directly between users, eliminating the need for intermediaries like banks. This peer-to-peer system is powered by blockchain technology, a decentralized and transparent ledger. Think of blockchain as a digital accounting book. Each transaction is grouped with others into blocks, forming a secure and immutable chain. This technology ensures transparency and security, key pillars that make cryptocurrency appealing. Bitcoin, created in 2009 by Satoshi Nakamoto, was the first cryptocurrency and remains the most popular. Thousands of other cryptocurrencies, known as altcoins, have emerged, each with unique features. Understanding its fundamental principles is crucial for making informed investment decisions. Bitcoin, often referred to as the king of cryptocurrencies, paved the way for a new era of digital assets. Its decentralized nature and limited supply have made it a popular store of value, often compared to gold. However, the crypto market is vast and diverse, with thousands of altcoins vying for attention. Ethereum, the second largest cryptocurrency, introduced the concept of smart contracts. Ripple focuses on facilitating fast and low-cost cross-border payments. Litecoin offers faster transaction speeds and lower fees. Each project has its own white paper outlining its goals and technology. Thorough research is essential before investing in any cryptocurrency. Remember, diversification is key to mitigating risk in any investment portfolio. The cryptocurrency market is not for the faint of heart. Its inherent volatility can lead to significant price swings. While these fluctuations can create opportunities for substantial profits, they also come with inherent risks. Market sentiment, regulatory news, and technological advancements can all influence the price of cryptocurrencies. This unpredictable nature makes it essential to approach crypto investments with caution. Investing more than you can afford to lose is a recipe for disaster. Start small, diversify your portfolio, and be prepared for the possibility of losing your investment. Don't let fear paralyze you, but approach the market with a healthy dose of skepticism. Staying informed about market trends and regulatory changes can help you make more informed decisions. Due diligence and careful planning are essential for mitigating risks and maximizing your chances of success. Shielding your digital assets. Security measures for crypto investors. Investing in cryptocurrency requires heightened security. Cryptocurrencies are prime targets for hackers. Safeguarding your investments is crucial. Hardware wallets store private keys offline, reducing hacking risks. Two-factor authentication adds extra protection. Use strong, unique passwords. Be cautious of phishing attempts. Implement these measures to safeguard your digital wealth. Enjoying the content? Make sure to hit that subscribe button and ring the bell to stay updated with our latest videos.
The cryptocurrency market is vast and varied, with thousands of cryptocurrencies, each with its own unique characteristics and purpose. Understanding the different types of cryptocurrencies is crucial for making informed investment decisions. Bitcoin, the pioneer of cryptocurrencies, is often categorized as a store of value, similar to digital gold. Ethereum is a platform for decentralized applications and smart contracts. Stablecoins aim to maintain a stable value, usually pegged to a fiat currency like the US dollar. Privacy coins like Monero prioritize anonymity and transaction confidentiality. Before investing in any cryptocurrency, thorough research is paramount. Start by reading the project's white paper, a document outlining its goals, technology, and team. Explore online communities, forums, and social media to gauge market sentiment. Pay attention to the project's development activity, partnerships, and overall market adoption. Exercise due diligence, be critical of hype, and focus on projects with strong fundamentals. Navigating the volatile world of cryptocurrency investing requires access to reliable information and analytical tools. CoinMarketCap and CoinGecko provide real-time market data for thousands of cryptocurrencies. These platforms offer comprehensive information on price, market capitalization, trading volume, and historical charts. They also provide news updates, educational resources, and portfolio tracking tools. TradingView is another valuable platform for technical analysis, offering advanced charting tools and indicators. Cryptocurrency exchanges such as Binance, Coinbase, and Kraken are platforms where you can buy, sell, and trade cryptocurrencies. These exchanges often provide their own charting tools and market analysis features. Social media platforms, particularly Twitter, have become hubs for cryptocurrency discussions and insights. Staying informed is crucial in the fast-paced world of cryptocurrency. Utilize these tools and resources to gain valuable insights and make more informed investment decisions. Investing in cryptocurrency can be rewarding, but it's not without its risks. Diversification and sound portfolio management are crucial for mitigating risk and maximizing your chances of success. Instead of concentrating your investments in a single cryptocurrency, spread your risk by investing in a variety of assets. This strategy can help cushion your portfolio from the impact of a single asset's poor performance. Dollar cost averaging, or DCA, involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This approach helps mitigate the impact of volatility by averaging out your purchase price over time. It also removes the emotional aspect of trading, allowing you to invest consistently. Setting realistic goals and investment horizons is crucial. Approach crypto investments with a long-term perspective, focusing on the potential for growth over time. Patience and discipline are key virtues in the world of investing.
Stories of early crypto millionaires. The world of cryptocurrency is filled with captivating stories of early adopters. Take the Winklevoss twins, for example. They invested in Bitcoin back in 2013. Their investment made them billionaires.
Eric Finman invested $1,000 in Bitcoin at 12 and became a millionaire by 18. His story shows age is no barrier to success in crypto. These tales remind us of blockchain's transformative potential.
Cryptocurrency, once a niche technology, has emerged as a global phenomenon. While the journey into the world of crypto investing can be daunting, armed with knowledge and a long-term perspective, you can navigate this exciting new frontier with confidence. Understanding the fundamentals of cryptocurrency, including its underlying technology and the risks involved, is crucial for making informed decisions. Diversification, thorough research, and sound portfolio management are key strategies for mitigating risk. The cryptocurrency market is still in its early stages, but blockchain technology has the potential to revolutionize finance. So, take the first step, educate yourself, and embark on your own crypto adventure. The future of finance awaits. Thanks for watching. If you enjoyed this video, please subscribe and hit the bell for updates. Best of luck with everything, and we look forward to seeing you in the next video.